sweet Caroline. Ba, ba, ba. Good time never seems so good. So good. So good. And in 2025, it looks like times may be so good into the mortgage origination space.
Today's show with Jim Clapp really exceeded our expectations because not only did we get some insight on leadership of somebody who was running a mortgage company, Starkey Mortgage, when I first met him at Lenders One, has continued to be in the leadership rank, but really right now is a transformational moment in the mortgage industry.
We've seen a 30 to 40% decline in originators, but yet we've seen reports that originations will increase as a result of supply increasing, as a result of the diminishing amount of originators that have been out there, and the efficiency of AI in the origination space with the independent mortgage banker.
Many loan officers and groups of loan officers are changing teams, they're going to new companies, and they're relying heavily on this new AI world, automated, where the only people they're talking to are recruiters. And I hope after this show, they're able to take a step back and realize this is your decision as a loan officer, and it shouldn't be made over a couple 1-hour phone calls. You need to do some research and say, where do I want to put my flag, my home for the next 5-10 years? Am I going to make a career out of this? And if I am, what's best for my family? What's the best for my way of life? What's the best for my personal brand and my branch brand in my community?
And I think that the biggest key right now that we can take away is having the mindset of being a nimble originator and a nimble mortgage banker can have dramatically positive opportunities when you have awesome originations in the month of March and maybe not so awesome originations in the month of December.
What's happening today is that you're able to get all those good things in a smaller company environment. So the environment is such that with AI and bot technology and such a robust vendor environment that you don't have to, basically forsake all those things to go work for a small company. A small company can give you basically all the same tools and things, processes that you have at a big company, yet less bureaucracy, less headaches, faster response times, better sort of customer service. So to run a successful mortgage bank and to basically hit on all cylinders, you needed the 4 Ps, and that's people. Obviously, people and culture. I think that should be at the top of anybody's list. You want to work with good people. You want access to those people. You want people that you could trust, respect, and enjoy working with. But then you got to think about the process. And today, you can have the best process and all the greatest technologies in a smaller wrapper. So products, again, most small to medium-sized mortgage bankers have an exhaustive product menu that's going to be identical to everything. Look, it's possible to have almost every product, if not more. At Assurance, we've got actually more products than I had when I was at a bigger company. So lastly, pricing. Again, with the advent of today's mortgage industry, the pricing advantages are small, if not stacked against the bigs, because the bigs have so much more of an infrastructure and operational overhead to cover. And so they need actually more pricing margin to cover that stuff. So
now is your time to make the right change. And with the transparency and shows like the MikeDrop show, you have more tools in your toolbox to make sure you end up at the home that you will call home for the next 5 or 10 years.
No matter where you sit, I think we can all agree that the worst of this is behind us. And every day that we get up, we're one step closer to a better industry cycle. So I encourage you guys to stay at it. If you're still in it at this point, you've done well, and just keep plugging.